Hey guys, Alchemist here. So firstly, I wanted to start by apologizing for not getting a video out last weekend. As some of you may know, I'm currently in my last semester of a double degree studying finance and philosophy, and I did have my final international finance paper due last weekend, and so I did just spend every last minute just making sure that I was happy with that. But that won't occur moving forward, and I'll make sure that I get these out every weekend. So as always, we're going to start off with AU, and I've just left the charts exactly how they were when I did the markups for the video 2 weekends ago, just to see if my analysis was actually correct. And if we look here at AU, and if we look down the bottom, this was Friday, the 7th of October, so that was the end of that week. And this is where I'd actually identified the price should be heading towards. And in this case, it was quite accurate. We also did identify that there was going to be liquidity above these highs and above these highs too. And so what we actually saw was that price came and swept all this liquidity through this wick here and again here, before then reaching the target that we had set out for price to be achieving. So that's pretty cool. What we'll do now is we'll just delete all of this and we'll remark everything up. Maybe I'll just go here. Awesome. And we'll jump up to the weekly. So we've had a very, very bearish week. And if we see, we're actually very low now in terms of where we're situated for AU. I will actually just share a video that I've marked up. I think it was January of this year, which I actually was saying that price will be coming to this POI here and this POI here as well. And we're finally actually all the way down here. It's been a very long time since we've been this low in the leg. So it's over about 2.5 years now. So hopefully we do start to see a bit more bullish momentum. Being an Australian myself, I do want to see the dollar strengthening in a little bit. It's not nice to be losing to the Americans for quite so long. But let's now jump down and continue to look. So this one here, this would be our demand zone. And in terms of supply, what we can identify here is we've got these buy to sell wicks. So we got these buy to sell wicks, which are also a flip zone. Okay, as they were reacting to this demand here. So price came into the demand zone, flipped the demand zone and created a new supply zone, and therefore it's a flip zone. So that was just to show you that this was the demand zone. However, on the weekly, all we need to mark out is a singular supply zone and a singular demand zone. So I will always remain consistent and delete that. We'll jump down to the daily. And in terms of our daily boss, well, last weekend, this here was the daily low. And then we did see a body close below. Since then, we haven't had a bullish pullback of over 110 pips and then a close. From the bottom of this wick to the top of this one was only 81. So our daily boss is going to remain where the last daily low was after we actually broke it with a candlestick outside. So that's the daily boss. Therefore, this here is the daily high. And with our daily low, yes, we can actually mark that out considering we have had a pullback from this wick here to the top of this wick here of 176 pips. Perfect. So we have our daily range. And on the daily, we're not going to be identifying any POIs. So that is all we need to do on the daily. We'll jump down to the 4 hour. As always, I'll need to make these a little bit neater. Being so meticulous with my charts and trading in general has actually led to me being like this in every other aspect of my life too, which I guess is sort of a bonus. Hopefully it's not annoying my girlfriend or anything like that, how much OCD I've been having recently, but I do like to have everything perfectly laid out. All right, so that therefore, now that this was our daily range, let's have a look for our 4 hour range. So this pullback here, this was greater than 90 pips. So at the time, this would have been our 4 hour low. And then as you can see, we do have a candlestick closing below there. The next candle does come and close back inside, but on the 4 hour, one body close is enough to signify a break of structure. On the 15 minute, we would need to see those 2 candlesticks. So this would be our 4 hour boss. Highest point here would be the 4 hour high, and we can see we actually swept that. Okay, and the daily low is going to be our 4 hour low as well. Awesome. So our 4 hour range is going to be from here to here. Now, this is not a great range in terms of POIs, especially POIs to be trading from. First things we can do is identify the extremes. So we have here, this would have been our extreme supply. And as we saw, we actually did sweep above. Mark this out as refined supply and identify the sweep as well. Okay. And then we do have the demand below, which is where we're currently actually tapping into. You can see we do have these buy to sell wicks here. However, this sort of stopped in the middle of nowhere in this time frame. If we were to look at the 15-minute, it potentially would have tapped into something there. Let's have a look at what else we can identify. We can identify this here as a supply zone. Okay, which has mitigated this supply zone. But we do have this portion of the wick above yet to be mitigated. So I'm just going to draw that back to there. We'll drop another one here, which will be this extreme. Oh, sorry, wrong one. Okay. Everything within here is now already had its liquidity taken. We just have the wick below here, which is the extreme demand. We have the extreme supply, which was mitigated here and swept above. We have this new wick, which is the zone that has already actually swept that liquidity. We have the lower POI, and we have price tapping into this demand here. So if we have a look, on the daily, we're bearish. On the 4-hour, we're bearish. And so potentially we could see lower prices yet again. This low should also be taken as a targeted low, as we see it's failed in its objective to set a higher high. Therefore, this low in and of itself here is targeted. So we should be seeing this low being run. So whether or not we're going to have that occur straight away, so what I could potentially see happening is we can either sweep this low, which is going to have quite a bit of liquidity resting below it in the sense of all of the orders within here in this 4-hour zone. They would all have, not all of them, but a lot of them would have resting stop losses, and there would be sell stops and things resting below here as well. So if we were to sweep below, we should see a nice reaction, which potentially after 15-minute realigns in terms of structure and order flow, we could be taking short-term counter trend longs up and until this region. But if price does return to this region, I would definitely just be waiting for 15 minutes to realign bearish, but before then taking a short to, if we do sweep to the low here, if this does hold for now, we'll be targeting this targeted low. Okay, it can either occur from this zone here, or ideally it could even occur from the zone above. It would be better priced. Okay, we could potentially even sweep this zone again and then head for that low there. So that's what I think will be occurring. Like I said here, if we did sweep and we saw 15-minute structure and order flow turn bullish, we could be taking counter trend longs. Just know that they're not going to be ideal. And if there is a nice sort of supply zone within this leg on the 15-minute, we should be taking full targets at those levels. So the next unmitigated supply zone when we counter trend, ideally that's where we should be taking the totality of our trade off and also taking partials along the way just to make sure that we're getting paid as well. So let's see if this one here was as accurate as last one, and let's have a look at EU. So on EU, the outlook was actually even more accurate than AU. I had identified this here as the low that was going to be taken, and we see it almost to the exact pip. And I haven't changed this, guys. If you did want to see, I will tag last week's video above here on the right-hand side, so you can go back and see that this is where I had identified EU to be going. That's not for me to say I'm arrogant or anything like that. It's because I know I've put in the work. I understand price direction and I had the correct bias. And what I also wanted to state is this is very high-level stuff. In the Discord, every member is receiving a daily outlook on AU, which has every single 15-minute POI that we could be trading from, and as well as valid trade setups from each place, what we need to see for it to be valid. They also have flowcharts, which will go through every single step in terms of liquidation, in terms of mitigation, what we need to see, where we need to see a 1-minute change of character as opposed to a 15-minute change of character. So it can just be a methodical way of just following the steps. And so if you did want to join, the link for the membership is below. If you did want to jump on a Zoom with me, just as a quick one-on-one for me to show you things inside the portal as to how the actual mentorship looks, as well as the Discord, I'm more than happy to do that as well. So my email will be in the description of this video. If you did want to send me an email, we can hook up a free Zoom session just so I can run through exactly what the course entails and to show you a little preview of what's inside. Okay, so we can see here on the outlook, it was pretty much bang on. We just did reach higher above. I think this was here the weekly supply zone. So we mitigated, we swept liquidity above here, and then came down. It was even a bit higher. So potentially this here would have been a flip zone. To the left, we saw that there was a demand zone. We flipped the liquidity there. So what I'm talking about here is this. Okay, and we did sweep the liquidity above all of these levels here, and then before continuing lower. So what we'll do now is we can remove this. We can remove this, it's no longer relevant. We can leave that one here. What we can see is the daily low and the daily high are still intact. So in terms of our daily highs and lows and our daily structure, it remains the same. This is the daily breaker structure. This is still the daily high, and this is still the daily low. With the 4 hour, let's follow price and see where our current 4 hour range is. So at the time, this was our 4 hour high. Once we had this body close above, therefore, then this turned into a 4 hour boss. When this became our 4 hour boss, the 4 hour low was just simply the lowest point below this line, which is going to be this candle here. Okay. And then to identify our 4 hour high, we would wait to see a pullback on EU of at least 80 pips. So once we tapped here and gave a pullback greater than 80 pips, this would have been our 4 hour high. I'm going to remove this and this as well. So at the time, this was our 4 hour range. Now what we can see here is the 4 hour low fails with the body close. So once we had this body close here, this therefore became our 4 hour boss. Okay, you can remove this line. And the 4 hour high remains to be the same place as it's the highest point above the 4 hour boss line. To identify our 4 hour low, we need to see a bullish pullback of at least 80 pips. So potentially from here to here, yep, that's 104 pips. So this would have been our 4 hour low. And now let's actually see if we have a body close. We do, okay? Ever so slightly, but there is zero discretion in my model, and we need to follow the systems exactly so that we can continue to execute in a systematic method. So once we had this body close below here, this 4 hour low becomes a 4 hour boss. We can delete the other line. All the members of the group will know I refuse to have them have more than one break of structure line for each time frame, as it does make things really confusing. So we can only ever have one 4 hour boss and one 15-minute boss and one daily boss. So to identify the 4 hour high, it's just going to be the highest point above this line. And we actually see here we have another body close above. So once we have this bullish candle closing above, this 4 hour high becomes our new 4 hour boss. And the lowest point below this point is going to be here, which is going to be our 4 hour low. Okay, the 4 hour high will be identified after we have a bearish pullback of at least 80 pips for EU, 90 for AU, just because it has a larger ADR. So we have had that here. Therefore, we've got the 4 hour high at this point. So this is a 4 hour high, 4 hour boss, 4 hour low. Let's drop our premium and discount. Maybe do it the other way. Okay. And let's identify some POIs within here. So as we saw on AU, the easiest and quickest thing to do is to identify the extremes, as they will always be valid. So this here is our extreme demand. And we have our extreme supply. Okay. We can see even in this candle here, the next one came up and swept it. So this is the refined supply. What we can do is we can minimize this zone to the unmitigated portion, so the portion that this next wick has yet to touch, as there'll still be orders resting within here. There won't be orders resting above this candle anymore, as the next one swept up and took the orders that were still resting above there. So this here is a liquidity sweep. We have this zone above, and with this zone that's just swept liquidity, this has created a new supply zone in and of itself too. Okay, so we have this zone here, we have this zone here, we have this is the demand. This here is all just imbalance. We can see that price is actually, when it stopped here, it's reacting to this larger demand zone. I only took the wick because the body of this candle and from wick to wick is huge. It's 120 pips. And we can see that the next candle has obviously filled in a lot of that space. So the only unmitigated portion, even as this next candle dipped below, we can just be saying that the remaining orders should be resting within this region, but we will still get a reaction when we come into here as well. So we can just leave this one here as the whole thing. In terms of where we've stopped here, on the 15-minute, there's probably some sort of demand zone here, but just as this is a free YouTube video and just to keep it nice and short for you guys, I'm not going to be jumping down to the 15-minute each and every time. So we won't be jumping down to the 15-minute on this occasion, but what we can now look at is where we should be situated in terms of our overall direction for EU. So we can see here, we actually swept the liquidity below this previous demand zone as well. In terms of our daily, we're still bearish on the daily, we're bearish on the weekly, and we've just turned bullish on the 4 hour. So why have we turned bullish on the 4-hour? Potentially just as a pullback into a better price zone to then take another continuation short. So if we look at zones to the left, let's identify some zones that have had interaction. Okay, so we have these buy to sell wicks here, which if we look to the left, have come into this whole supply candle, but we can just take the wick. Okay, what we can see through that candle here is that price has pushed up. If this supply zone was to hold, we should have then seen price creating another lower low, but that's not what happened. What happened was we absorbed the orders resting within here, and we can see that absorption through the upper part of this week and the lower part of this week as price tried to push down, but essentially demand stayed in control in this point and pushed up into a higher supply zone. Then when price came back down into this newly created demand zone, the demand zone tried to hold. Okay, we did have this bullish pullback here in this reaction. However, it was a failed reaction as it didn't set a new higher high, and instead price went on to set a lower low, lower than this low here. Therefore, we have a creation of a new flip zone here. Let me get rid of this. If we have a look at this here, this would have been a demand zone as it set a higher high on a lower time frame. So this here would have been a demand. We have some buy to sell wicks here as well. So they're only valid if the wick is on both sides. If there was no wick above this candle here, then it wouldn't be a valid zone. But as there's a wick below the previous candle and above the next candle, we see that absorption of the orders that I was just referring to. So we do have this here as another supply zone. Okay, you can see this here is liquidity in these flat lows. I did this sweep. Let's see, the high of this one is 98169 and the high here is 168. So it hasn't yet swept. So we have equals here. Okay, which price has pushed up into, and then we've seen a reaction, but it hasn't yet swept it. We could potentially still be seeing bullish order flow. If the 15-minute was to remain bullish at this point, we could potentially see price reaching for the liquidity here, filling in this imbalance. And then if we were to come into one of these zones above, maybe this zone here or the one above, and then we saw a 15-minute realignment in the sense that 15-minute structure and 15-minute order flow was to turn bearish, we can be taking shorts from here to be targeting the 4-hour low. As the daily is bearish, the 4 hours just only turn bullish, potentially just as a to provide us with a pullback greater or higher up into premium. However, given that the daily has already actually gone and tapped into premium, the other thing we can look at here is in the flip side of the equation, in that this high has failed to set a lower low. So potentially this high in and of itself should be targeted too. But the way we're going to know that is once we see these zones start to fail. We can't yet say that this is a targeted high until we see at least one of these supply zone fail, then we know that it is targeted, because we can just still be coming back up to here. Price may be holding at these supply zones and then be setting a lower low. So this is one potential outcome that could occur. The other one is we can tap into this demand zone first, have a bit of a reaction, come into here because we do still have this unmitigated demand zone below, and then potentially this could hold to set higher prices again, or it could remain bearish as we are still bearish on the daily to see a new lower low being set. I don't think this will occur in 1 week, and it will take quite a bit of news. As we can see here, EU is really trying to come back up now, considering it was bearish for months and months on end. So hopefully we can start to see a little bit of bullish momentum on EU, but this is one other scenario. The other thing we could potentially be seeing is that this is going to become a targeted high if these supply zones do start to fail. Okay, just going to write targeted with a question mark because we're not yet sure that it's targeted. And how we'd know, as I said before, is if these zones start to fail. So if these zones get run through, okay, even potentially even after this one just fails, because this is the last real point of interaction. If this one fails, we can be taking this high here as targeted, and we could be taking a long to be targeting this level here. Okay, so that's the outlook for EU. Let's check back in next week and see if this one was right, and let's jump on to GU. Okay, so the GU outlook wasn't as good as the other two. So we can say we got 2 out of 3 for this week, and let's see what next week brings. So to get rid of this, I was expecting lower prices again on GU. However, we did see that the 4-hour high was broken, and we'll actually just jump on the daily too, just to see if we did have a body close above, which would signify that we do have a new daily boss and that we'd actually gone bullish on the daily as well. So I'll get rid of this. I'll leave that for now, and I'll just delete all of this stuff here. And let's have a look on the daily. Okay, yep. So we have had a body close above. Again, it is a small one. However, it doesn't matter whether it's small or large. We follow our rules, and the rules state that if we have a body close above, we have a break of structure. Therefore, this is our daily boss. The lowest point below here is going to be the daily low, which is still going to remain as it is. However, we know that the 4-hour low is not going to be there, so I'll just remove that part from the description. Okay, and with the daily high, once we had that bearish pullback of greater than 100 pips, we could be labeling the daily high there, and we can see there's over 450 pips there. So we can label this one here as our daily high. Daily high, and then we'll have a look at the 4-hour. And let's follow the breaks of structure on the 4-hour too. So we can get rid of this, we can get rid of this, we can get rid of this, get rid of this, get rid of this. Okay. So at the time, this was the 4-hour high. And then once we had this body close above here, this was our new 4-hour boss. Therefore, the 4-hour low was the lowest point below here, which is that daily low. And then let's just actually mark that out as it were. So daily plus a 4H low, just to remain consistent. Minimize it a little bit just so that we can keep that in mind. And since having this break, we'd then wait to see a bearish pullback of greater than 100 pips for the 4-hour on GU. Yep, so we've got one here. So the daily high is going to be the 4-hour high as well. And since then, neither the high or the low has actually been taken. So this is actually going to be our daily range. It's going to be the same on the 4-hour as it is on the daily, which is usually not ideal because it gives us a very large range on the 4-hour that we'd need to play within. And we can see here, well, we have just tapped EQ. So that's really good. We can see prices come back to mitigate exactly 50% of this region before pushing back up. So we could potentially be seeing higher prices again on GU. So let's identify some POIs. So again, as we just saw on the previous two, the easiest things to do is to identify the extremes of the range. So this is going to be our extreme demand. This has been mitigated with the wick, so we can just drop this range to just below that wick. We can see we actually have buy to sell wicks here, so potentially on the 15-minute or the 1-hour, it might have interacted with the zone to the left. However, if that interaction is not on this time frame, we're not going to be marking it up like that. So we can get rid of this. We can just leave the lower zone, and then the extreme supply will be the highest point above here. We can see this is actually swept liquidity as well, and price will have a look and investigate if that's actually been tapped. But let's just identify this here as a sweep. Okay, and then let's have a look. It looks like it has. So the low of this candle is 792 and the high of this candle is 800. So it has. Perfect. So that has now been tapped. It probably has swept the liquidity above. Yep, it has above here as well. Okay, so this is our extreme demand, sorry, extreme supply. Once we tapped into that, the wick of this candle would have been the next extreme supply. And then we saw that being mitigated here. We did also sweep the liquidity above here. On the 15-minute, this would have been quite a significant sweep as this was over 8 hours. So we'll mark this here as a sweep. And then we can continue playing the mitigation. So now this is the new zone. And then it was tapped there as well. So we can just mark it out like this and then just minimize to the point that hasn't yet been mitigated. And then we'll start with the demand from below as well. So we have this zone. We have this zone, which swept a whole lot of liquidity. I'll just take the wick of the zone and then get rid of the mitigated portion. So we'll just decrease this one just like that, pull it across to the right, and that's going to be a demand zone. We also have, this is a demand zone. Which has also swept liquidity on a lower time frame. I know it's only one candle here, but if we were to drop down, there's definitely a liquidity sweep there. We've had interaction here. But as you can see, as I was mentioning before, because there's no wick below this candle here, we can't actually identify this as a flip zone, as it doesn't show that there was orders being absorbed. It doesn't show that price pushed in and then pulled back below the close of this body. It's just simply a pause, touch there, and then a continuation. So it's not a flip zone. We didn't actually flip this supply because it hasn't had that candle, the wick below. So we mark this here as a supply, but there's no flip to be marked on this region on this time frame. Let's have a look at these. Yeah, so we got these buy to sell wicks to the left. Okay, in this case, we do have that wick on both sides. All right, so we can identify this as a demand flip, and we can see price actually swept below there and then continued bullish. All of this has now been mitigated. Once we came back down in here, we had this pullback. This would have been, it just looks like imbalance on this time frame, but again, on a lower time frame, it probably has tapped into something in here. And then we can see this here. This is also swept liquidity here. So we can take this whole candle, we can just take the wick. We can also identify this zone, okay, which if we look to the left, we had this as a supply. Okay, price tapped in, absorbed orders, swept liquidity, and then this actually flipped the supply. So this is actually a demand flip zone. So this is liquidity sweep. We have these buy to sell wicks again, just to show you that this interaction just happens everywhere. So this, if we look to the left again, this would have been a demand which put in a higher high on the lower time frame. Mark this out as demand. Then once we tapped into this, we created this as a supply zone, because as I showed on the previous chart, price tapped in, pushed up. If this demand was to hold, then we would have pushed here and set a new higher high, but we didn't. We pushed down. Demand tried to hold, and we see that in the wick above the body, but then demand failed and supply remained in control. So therefore, when price came back up into this region, we were interested to see if this supply zone was going to remain in control and if we were going to see a lower low, or if price was going to flip this demand zone and flip this supply zone and create a new demand zone, which is actually what occurred. So here we have the wick below as well. So price pushed in, absorbed all the orders, and then continued higher anyway. And we did get a body close above here. So this supply zone failed. Therefore, we have the creation of a new flip zone with these buy to sell wicks. Okay, which is exactly where price is currently holding. And we can see they were actually just swept. GU does like to sweep a lot. So does AU, but GU is just on another level. It's another reason why I really don't like to trade it. There's a lot of wicks everywhere, and a lot of zones that should be protected aren't, because they end up just getting swept. However, if you do trade it, I understand it does move quite a lot in just one day, so you can be maximizing on a large amount of pips. Just potentially you might need to have a larger stop loss just to accommodate for those sweeps. So if we have a look at this, we're bullish on the daily and we're bullish on the 4 hour, and we've already fulfilled our pullback to 50% of this range, and we're seeing these supply zones start to fail. So my idea here is that we could potentially be coming into this zone, which is actually swept liquidity. This is a nicer zone than this one to be trading off. And then if 15-minute was bullish at this point, we can be taking continuation longs. We can see that this region above, if we just minimize this, because we know that price did mitigate this larger supply zone when we came into here. However, we have this wick, which is yet to be mitigated. So price could be reaching for the remaining orders resting within here, at which point we'd need to see if price was going to remain bullish and we'd get a new daily break of structure, or if this zone here was going to hold as a supply zone and price would start pushing us down. So we could see that. We could see the lower zone holding as well. So we could potentially be coming down to here, having a change of character, then coming back up. Or price could be reaching for that liquidity right now, because we are still in these buy to sell week demand zone. So we can see if price was bullish on the 15-minute, longs are going to be valid from here, as the 4 hour and the daily are bullish, and we're in a zone which has swept liquidity, which is one of the liquidation models we look for. Just depends on what 15-minute order flow and structure was at the time as well. We can be taking continuation longs. We may potentially be having a reaction at this unmitigated portion of this supply zone, potentially just on the 15-minute. It could be a slight pause, or could turn bearish just for a little while to come into a newly created demand zone we could have along the way to then be reaching for liquidity above these highs. I don't envision price coming down to these zones again. However, I was wrong on GE last time. I may be wrong on it again, but let's just see how this works out for next week. If you guys do have any questions or comments, please do let me know below. And I will be working on getting more than just these weekly outlooks done for you guys. My last exam for my double degree will be on the 7th of November. And I do have some trips planned with my girlfriend. We're going to Bali, and I'm also going up to Queensland in Australia in a couple of weeks. So things are continuing to be quite busy. However, after the 7th of November and after I return from Bali, I will have a lot more time. And that will also coincide with a lot of members completing the course. So we'll be a lot more active in the Discord then as well. But we're continuing to be active, more and more active each and every day. So if you did want to join us and see all the success stories in there, I'd love to have you within. If you have any questions, let me know. Otherwise, I'll chat to you all in next weekend's video. Take care.